everyone, this is Dhruval. I hope everyone is doing amazing today, and if you're not, then trust me, grab something to eat, what you like the most, and you're definitely gonna feel amazing afterwards, for sure. And then you make sure that you come back to this video because trust me, guys, it's really fascinating indicator which I'm gonna share today with you, and I would like to show inverse correlation between Indian VIX, which is called volatility index, with our SENSEX and NIFTY, as you guys can see on a screen. And you'll find Indian volatility index in a short India VIX, which is the ticker name, on a trading view very easily. And this indicator could be helpful for a long-term investor as well as for swing traders if you use it in a right way. And let me just explain how does it work. Indian VIX volatility index shows inverse correlation between our traditional market such as Nifty 50 and SENSEX. As you can see on a screen that I have prepared weekly chart with an inverse correlation of SENSEX and Nifty. See, I hope you guys can see properly. This is this two, a blue, aqua blue, and an orange, which is SENSEX and Nifty, which is highly correlated, perfectly correlated. And this candlestick is Indian VIX, India VIX. So I just wanted to show you this. Here is the uptick in India VIX, and it has fallen down with a downward momentum, which means a correction, a small correction in a both index fund, SENSEX and Nifty. Again, there was a huge uptick in a volatility index, and that was a March crisis, and we have followed through a correction, a deep actually that was a crash. So in the market, again, you guys can see we have volatility index increase and the market decrease. We can see another example in here. Volatility index increases in an uptick and market got correction. We can see example here in a recently volatility index gets up and we have followed correction. So this indicator could be useful for long-term and short-term investor, for both. And you can easily see that how nicely this indicator does work. And in my personal opinion, if we can buy index such as Nifty 50 on some corrections with the help of this indicator and hold it, then we might outperform several other financial assets over certain period of time. I'm not saying that we're gonna outperform next day, but yeah, we need to be patient. However, this is not a financial advice, guys, so I just want to show you that how this indicator could work in a well way. And let's just take one example. If we buy Nifty 50 or SENSEX when India VIX is a plus 5 or 10% up, then we could find nice entry to add into our positions if we already have. Otherwise, we can start a new position, and we could also use this indicator to book profit or sell, because when VIX is down minus 10% or more, then it would be a great time to book your profits. Let's just take another example from very recent history, like it's today. Let's just take an example from today specifically because it's very simple. Let me just go into a 4-hour time frame. Okay, let me just remove all the drawings. Alright, this is a 4-hour time frame, as you guys can see. Let me just settle down. See, let me just show you first example. Volatility index increases and we have a correction into the market. Again, we have volatility index increase and we have correction. I'm really sorry, I just messed up a little bit that, but I hope you guys can see. Let me just as you guys can see here, our volatility index increase and we have a downward uptick in SENSEX and NIFTY both. Let me just give you today's example. Okay, see, today we have a volatility index increase by 5% when I just saw first in the morning, and we have correction. Let me find another example for you guys. Yes, here it is. Our volatility index increases and we can see further corrections in a SENSEX and NIFTY. You can choose. Yeah, can I find any another example? Okay, yes, I can find another example. Yes, we have volatility index increases and we can see the correction into the market. So this is how this indicator could be useful. And today when the market open, we have seen VIX 5% plus, yeah, which means that we might gonna see a correction with a higher probability, and which we have done, or otherwise we might have seen a sideways range for some time, but we have seen correction to up somewhere around 1.60%. That was a percentage correction overall. However, we have recovered it in afternoon hours and close at -1%. Yes, and so in a nutshell, Indian VIX volatility index could be used to predict where the market is going to move, whether you are a long-term investor or a short-term trader. And the reason behind, I just wanted to mention that the reason behind today's small correction was that yesterday we had a talk from a Federal Reserve, which is the Central Bank of America, and they are having a largest balance sheet ever, high inflation, more short-term bonds than ever before. They have risk to the upside, inflation risk at the downside for the economy. And inflation is a broadening currently in the United States of America, and due to those reasons, US market had fallen down, and they have dragged down most of the other markets with it. And well, let's see how US markets does today. So far it's been a sideways range today, as I can see, as I've seen just a couple of minutes ago. And I've also found Federal Reserve's open market committee meeting transcript. If you want to take a look into that, then I'm going to put a link into the description. You can read it by yourself, and here it is. And this was really fascinating when I read this. Actually, I knew about this, that they are going to taper, as they mentioned, in light of the inflation developments and the further improvement in labor market. Members, which means Federal Reserve Committee, they have decided to reduce the monthly pace, which means in short, for someone who has a basic knowledge, they are going to reduce the pace of printing a money. And printing a money is definitely going to cause the inflation, which is happening since 2020 March, since the COVID crash. So we all been facing the inflation, higher CPI numbers and those kind of things, but that is a topic for another video. I'm sure I'm definitely gonna explain in a basic way so everybody could understand. And so that's it from my side, guys. Thanks for watching, and please let me know if there is any question. I'll see you in a comment section.